Chosen Trading presents The Key to Understanding Stocks, brought to you by G God Options. This is just a refresher. The first two classes will be a refresher for most of you guys. Stock one-on-one basics. Let's dive in. What is the stock market? The stock market is a place where people buy and sell shares of companies, which are small pieces of ownership in these companies. Companies use the stock market to raise money to grow their businesses, and investors use it as a way to make money through price increases or dividends. Most of these stocks are bought and sold in the New York Stock Exchange or NASDAQ. Any questions about what is the stock market? All right, moving on. Stock market participants. You have retail investors, institutional investors, brokers, listed companies, which are businesses that sell shares to the public. You got government regulators, bodies, the SEC, SEBI, they monitor the market. You got government officials, the people that make the laws, who signs the contracts off for a lot of these chip and construction companies, also able to make money in the market as well. So that gives an idea of what we're facing every day. Market makers providing liquidity by constantly buying and selling stock. And we're considered the retail investors. We actively buying and selling, aiming for short-term profits. Volume and liquidity. We will get more into volume and liquidity into option trading in our part two. This is just the beginner basics. Volume is the number of shares traded in a stock or market during a specific time. With high volume equals more activity and interest. Liquidity is how easily and quickly a stock can be bought or sold without affecting its price. High liquidity equals easier trade, tighter bid, and ask spreads. When you get into your option contracts, you want to get into something with high liquidity so you can get in and out. Imagine you was in a small company stock that hardly anyone's trade. One day, you want to sell it fast. You need to sell it fast, but there aren't enough buyers. You might have to sell it at a much lower price. That's low liquidity, and it can cost you money. Now, imagine if you own the Apple stock, which is traded constantly. You can sell your shares quickly at the market price because it's a lot of buyers and sellers always available. That's high liquidity, which makes trading easier and safer. So you always want to trade stocks that are popular and frequently traded, such as Apple, Microsoft, Tesla, the Magnificent Seven. You shouldn't be trying to trade AMC, GME, or none of those meme stocks. High volume and high liquidity equals a good trade if you're on the right side. Any questions? Moving on. Bull versus bear market. Bulls strike up, bears strike down. In a bull market, prices are rising or expected to rise. Investor confidence is high. Economy is usually strong. It encourages buying. An example, look at us right now. Look at SPY. Look at Apple. Look at Microsoft. All our favorite tech stocks are going up right now. Look at the Magnificent Seven. It shows a long upturn, a trend in these stock prices. Bear market is when prices are falling or expected to fall. typically a 20% decline. Investor confidence is low. Economies may be slowing or in recession. It encourages selling or caution. An example, look at COVID. Look at the recession 08, 06. Those were all when we had big economic market downturn. Those were the time to buy. Market sectors and sentiment. Market sentiment. The overall attitude of investors toward the market is usually influenced by news, social media, economic data, and even earnings. ETFs that track these market sectors and help gauge sentiment is the S&P 500, which is the ticker SPY, NASDAQ 100, which is the ticker QQQ, the Russell 2000, which are the tickers IWM, RTY, the small cap sectors, and XLF, which is the financial sectors. These are all ETFs that we trade on a daily, and you must watch. You can buy these and trade them on Robinhood or Webull. Futures. Futures reflect sentiment almost 24/5. You can trade from Sunday 6 p.m. to Friday 5 p.m. You got the S&P 500 futures, ES, the NASDAQ futures, which is NQ, and the Russell 2000 futures, which are the small caps, RTY. But we'll get deeper into futures later. Futures is just used to gauge your ETFs, SPY, QQQ, and IWM. Market sectors. There are 11 market sectors, but we're only going to focus on three: materials, communication, energy. I have the tickers next to it as well. You guys can write down the tickers as well. Financials, industrials, tech, consumer staples, real estate, utilities, healthcare, consumer discretionary. You can buy long term in each one of these sectors. But as far as trading, we're only focused on financials, industrials, and tech. In XLF, you got top tickers like banks, cars, JPM, Morgan Chase, BAC, Bank of America, Visa. These are the abbreviations so you can find them on your Robinhood, Charles Schwab, or whatever brokers you're using to buy these stocks. In XLI, industrials, you got top tickers like Caterpillar, our heavy machinery, construction, mining equipment, Lockheed Martin, our aerospace and defense, waste management, pretty self-explanatory. And then we have XLK. This is pretty much my portfolio. Microsoft, NVIDIA, Apple, etc. You guys know where I'm going with. Here are also some more sectors and sentiments. You guys can write that down. You can watch XLP to see how the consumer stocks are going to move, XLE to watch energy, XLU to watch utilities, XLB to watch materials. Economic events for traders. These events move markets and are critical for analyzing inflation, interest rates, and economic strength. These economic events, each one of these can cause your position to go to 0 or 1,000%. The FOMC meetings. These are when the Federal Reserve decides on interest rates, monetary policies, which can affect borrowing costs, business growth, and stock prices. This could send your position up tenfold when Jerome Powell speaks. Jerome Powell is the chairman of the Federal Reserve. Whenever he speaks, you listen. Sometimes it's best not to trade when he speaks. It can be very volatile. You got the Consumer Price Index, the CPI, which measures inflation at the consumer level. It's basically how prices for everyday goods and services are changing. High CPI can lead to interest rate hikes, which traders watch closely. You got the job report, also known as the non-farm payroll, NFP. It shows job growth and unemployment rates. Strong job numbers usually indicate a strong economy, which can influence Fed decisions and market movements. You got the PPI, the Producer Price Index. It measures inflation at the wholesale producer level. Rising PPI can signal future consumer inflation, and that can affect stocks, bonds, and commodities. You got retail sales, indicate consumer spending trends. It's released monthly. Strong retail sales equals strong consumer confidence. And last but not least, we got the GDP, the gross domestic product. It's like the total economic growth. It's released quarterly. GDP growth suggests an expanding economy, which is usually positive. So good numbers, you can make money with longs. While weak growth can signal caution. It calls for positionings and shorts. And I know that this is a lot of news. And I know you guys are like, well, how do we find it? How can we all centralize it? Easy. You can use Market Watch Economic Calendar. Simply type that in on Google and it'll pull up all the news. Market Watch has an economic calendar that shows scheduled reports and events. So it can help us train, it can help us plan ahead. So let's say it's Friday and we want to know the news that come out in the next upcoming weeks. That website will have that up for us. All of these will. Investing.com calendar, you'll see all the news. And the Forex Factory, which is great for real-time updates. But it's with the investing.com, it's a global calendar. It covers like multiple countries with forecasts, previous numbers, impact ratings, which is great for Forex and commodities. The Forex Factory is global, but you can pretty much filter by country or asset and see how the market is reacting. That pretty much sums up the stocks one-on-one basic class. If you guys want to join the Discord, please scan the QR code. I'll be taking questions in the chat. Someone asks, what's the difference between a stock and a share? A stock represents ownership in the company overall. It's basically, a share is just one unit of that stock. For example, Apple is the stock, but one single piece of it is a share. You understand? All right, next question. I'm just taking all the questions I see in the chat. How much money do I need to start investing? Well, you can start with as little as the price of one share. You could do even less, but why waste time? Why get a fractional share? The important part is starting with an amount you're comfortable with. What are you comfortable with losing? Yeah, you might win 10,000, $1 billion in the long run. But how much are you willing to lose right now? If you lost $100, will you be hurt about it? If you lost 10,000 today, would you be hurt about it? Moving to the next. What is the difference in long-term investing and day trading? Well, long-term investing means holding a stock for years, buying and holding a stock for years. When I buy and hold stocks, I'm looking at it from a 5-year perspective. I want to grow with the company. Day trading means buying and selling within the same day to take advantage of short-term price moves. Do I need a stockbroker to get started? No, you do not need a stockbroker. The brokerages now are the apps like Robinhood, Fidelity, or Ameritrade. So you do it yourself. No, you don't need a stockbroker. Use the brokerages and buy it yourself. Make sure you get our ebook. We got the website right here on the doc sheet. Follow us on Instagram and TikTok. Scan the QR code to sign up for our Discord. Thank you, everyone, for joining our very first class. I appreciate you for taking the time to learn with us today. If you would like to join the second class, make sure you join the Discord. The link is in the chat and also on the doc sheet. That's where you'll get updates, resources, and access to the full community. I'll see you all in the next session. Have a good day. Stay chosen.